Mohamed, great to get your perspectives on a day like today. If the Fed did go ahead with what Bullard is prescribing, which is the 50 basis point hike, one full percentage point by July or so, then that would seem like an admission by the Fed of a policy error that it has made.
It will be the second admission of a policy error. The first one was on November 30th, when they finally retired transitory, having miscalled inflation for so long. And now this policy error would be of starting to slam on the brakes because they didn't take their foot off the accelerator early enough. It's really fascinating, Melissa, the way the market reacted today. We came back strongly and impressively from the inflation print because we had confidence in corporate earnings and we had the behavioral conditioning. Then came the comments which suggest a policy mistake that would lower economic growth and hurt earnings. And that's why we've come down again. And you can see that clearly in what's happening in fixed income. So the market is pricing in a higher probability of a Fed policy mistake.
You're pointing out, I think on Twitter, Mohamed, the huge spike that we're seeing in the two-year yields specifically. And I'm wondering what you are most concerned about in the next few weeks as we are going to get more Fed speak. And as Mike had mentioned, they will be asked specifically, or they'll be sort of forced to comment on whether or not 50 basis points in March is a possibility.
Look, they have to do two things. They have to regain inflation credibility. They are way behind in their understanding of inflation. And two is they have to control the policy narrative. It is amazing to me that the marketplace now expects 150 basis points of hikes this year and is starting to front load, as Steve said, the hiking cycle. That is serious. So they've got to do two things quickly. The trouble, Melissa, is they're so late that I can't think of an easy way to do this. And this is the one thing we all wanted them to avoid. We didn't want them to be in a lose-lose situation, and increasingly they're being forced into a corner of just lose-lose.
Mohamed, just to get a little more specific on what Bullard is putting out there, he wants 1 percentage point of hikes by July 1st. So that would be 100 basis points in 3 meetings, therefore 50 in one, 25 in 2 others, as opposed to by the end of July when there's another meeting and you might be able to get to your 100 basis points 4 weeks later. Is that really the difference between the Fed having this methodical start to a tightening cycle that the markets can handle and a Fed policy error?
So what he wants, and we should all want it, is regaining control of the policy narrative and of policy credibility. So his way of doing it, and it's not only his way, others are proposing this, is move quickly, show that you're serious, and contain inflationary expectations. Inflationary expectations are starting to move, not only to compensate for past inflation, but also to anticipate future inflation. So his idea is move quickly, restore your credibility, and then wait, see how the data evolves. And that is a more orderly way of doing it. The trouble is that if they don't get it just right, they risk having to hike again. And then you worry about the economy and you worry about the typical mistake, which is when you slam on the brakes, you increase the probability of a significant slowdown and you hurt corporate earnings.